If it couldn't get any weirder, we just had calls for a 50% drop in national home prices. Homes are delisting at a record pace, and Trump is doubling down on a 50-year mortgage. And what is the Fed up to? Are they warming up the money printers? Some Fed members may be alluding to what comes next. We're going to hit these headlines and peel the curtain back so that you have a perspective and context on what is happening in the housing market. So, will the 50-year mortgage impact housing, and what will the money printing do to the housing market? Now, in order to understand why the Trump administration is so adamant about pumping the housing market, we actually need to understand why some are calling for a 50% home price correction. Believe it or not, these are related. Melody Wright, in an interview last week, was put on the spot on how much prices would fall, and she said 50%.
I think, Adam, we're going to correct all the way to a point where household median income matches the home price, the median home price. And so that is going to be worse than 2008.
Finger to the wind, what type of percentage decline is that from where we are right now?
It's going to be near your 50%, and much greater in certain areas.
Now, what she was explaining is that the median income must be able to afford the median home, and she clarified that it was more like a 38% in national home price drop to get there. She also clarified it would take more than just next year. However, it appears she is referencing this Fannie Mae calculation saying that prices must drop 38% to get back to affordability. And there are some major assumptions with this calculation, like assuming incomes will never rise and rates won't drop. But the real problem is that this reference was from an article published over a year ago. Bloomberg published this on October 2024. And of course it resonates, because it's so expensive to buy a home right now. Zillow shows this very plainly. It's way cheaper to rent than to buy. However, Zillow also shows that nominal incomes have grown about 4% since the Bloomberg published that article. Rates have been dropping, now down about 70 basis points from where they were a year ago, and about 2% below where they were at the peak in October 2023. National home prices are basically flat this year, but it still feels so unaffordable. In fact, I believe that sentiment is worse now because people are wondering if it will truly take a decade to get back to normal. Enter bond buying and the 50-year mortgage. Now, we'll hit the Fed in just a minute, but first, the Trump administration has doubled down on the 50-year mortgage, which analysts say would drop the monthly cost about 7%. Donald Trump, after getting major hate, and FHFA Director Bill Pulte backed off of this a few weeks ago, Trump now posted this picture of the 50-year mortgage again. But it still feels like a drop in the bucket. And with an additional 20 years of payments, many people are asking, what are we actually doing? Which makes me wonder, is this in tandem with what's happening at the Fed?
Effective December 1, that we will be, freezing the size of the balance sheet. And the December 1 date gives the markets a little bit of time to adapt.
As of Monday, the Federal Reserve is no longer shrinking its balance sheet. This was a process called quantitative tightening, and in fact is now alluding to balance sheet expansion. In the past, we called this quantitative easing. In September of 2019, they swore it wasn't quantitative easing. And just so you know, they're not going to call it QE. Now, to clarify, please don't confuse this with home values automatically going up. That's absolutely not the case. But it is upward pressure on home values and really all asset prices. This is definitely something to keep an eye on, which brings us to record delistings. Many analysts are calling for record listing growth next year that will usher in this new wave of home price declines. Except record delistings are only proving that sellers don't have to sell. 40% of all homes are owned mortgage-free, and 70% of mortgages have a rate under 5%. Now, the real question here, are these delistings going to end up in spring inventory? It's something we'll have to watch for to see if it actually materializes. Now, it's really important to remember that we're not buying a housing market. These data points are helpful to understand the big picture, but what's happening local in your city, in your neighborhood, make a much larger difference with the outcome of where home prices and direction go. Demographics, migration, incomes, all of those matter greatly to the outcome of each individual housing market. Just like in Nashville, the Nashville median home price is up, and yet I'm helping a home buyer purchase a home, forget this, 20% lower than where it sold 1 year ago. And I'm shocked, but I'm also seeing some neighborhoods continue to remain strong. Overall, it feels much slower because there's about 17% more active listings than a year ago. However, earlier this year, that number was as high as 33%, meaning the growth in inventory has shrunk drastically. Now, it is also a point to note that demand has not picked up, even though things are more affordable this year. That is a concerning sign. However, even in Nashville, there's a migration boom happening. Now, this may have slowed some, but it still continues so much stronger than many other boomtown areas. I interviewed Eric Finnegan from John Burns this week, and he even acknowledged that the Nashville migration boom continues along with areas like the Carolinas, North and South Carolina. And it's not just the migration boom, but these areas also have a stronger birth rate, which he says is extremely important. Now, I will release the full conversation we had later on, but here's a clip of what we discussed earlier this week.
Nashville is different. So Nashville has had, again, as far back as I can remember, very strong migration, had even stronger migration during the pandemic, and it has continued to this day. I know at least I can count, 3 or 4 friends that moved from Boulder, Colorado to Nashville.
Ultimately, home prices have to come back in balance with incomes. Now, how this happens, nobody knows. Whether it's mortgage rates dropping, incomes rising, or home prices falling, we just don't know. It could be a new mortgage product from the Trump administration, or it could be all of the above. And how long it takes is also a big question mark. So if you're worried about home values dropping, there's nothing wrong with renting. But if you do want to buy, there are many ways you can hedge in a market like this. I'll pin a video at the end of this if you want to see different strategies on home buying in a very difficult market. And with that, I hope you all have a great rest of the day. I look forward to seeing you next Saturday. Thanks a lot.